Okay, good evening everybody and welcome back to Walks in Wall Street. It's a pretty interesting night in New York. It's Thursday, July 27th, 2023. Now, I want to preface the live stream by sort of talking about tomorrow, actually. Now, we could break a major record, a massive record in New York, specifically in Midtown Manhattan tomorrow. There is a high possibility we could hit 105 degrees here in Manhattan. So if you're out and about, if you're traveling to the office tomorrow, make sure you hydrate, because if it's going to be 105, it's probably going to feel like maybe 107, 110 degrees. Now, in some parts of the city, it may even feel hotter because the concrete and the asphalt is just going to warm up and heat up pretty much all day. So just be mindful of that. It's going to feel crazy, 105 degrees. But that's really nothing compared to some of our other friends. I think in Phoenix, one of my buddies who live out there says it was 117 degrees today in Phoenix, Arizona, which is wild. It's crazy. It's funny. I just came back from Miami. I spent last weekend in South Florida, and it actually kind of felt cooler than New York. And I think it's because of all of the horrible air quality that we've had in the Northeast this summer. It's been really unfortunate, with the wildfires in Canada pushing all of that smoke to the Northeast here in the city. It actually hasn't really felt that bad, at least when I was in South Florida. It feels hotter in the city. Anyway, enough about the weather. I apologize, we were not able to be live yesterday, and I think it was a pretty important day to be live. Yesterday was Wednesday, it was July 26th, and it was the conclusion of the FOMC meeting. Okay, now that is the Federal Open Market Committee meeting, where Fed Chair Jerome Powell, I'm sure you guys saw the live stream, maybe you haven't. You could actually go back on CNBC's YouTube page and watch Federal Reserve Chairman Jerome Powell's speech, if you will. So we do have a new update as it relates to monetary policy. So I think it's appropriate to review that before we start the stream today. We have a gorgeous view of the Empire State Building, pretty clear, pretty hot, pretty humid, but the Federal Reserve decided to raise interest rates again by 25 basis points. But this isn't really a surprise. We've been covering this, we've been monitoring it. If you looked at the futures markets the night before, the day before the FOMC meeting, which was yesterday, markets were pricing in about 100% probability or 100% likelihood that we were going to get an interest rate hike of 25 basis points. Now, after that hike, the Fed funds target rate is 5.25% to about 5.5%, which is standard consensus, I would say, on Wall Street. If you look at the major investment banks, some of the major economists at those banks, with a few, I would say, minor exceptions, pretty much everybody thinks 5.5% is going to be the peak in terms of interest rates as relates to Fed funds rate. Now, what I want to do today is sort of try to dissect exactly what was said during Fed Chair Jerome Powell's speech, try to interpret what he means by that, and sort of break it down and make sense of it. Now, I'll quickly give you sort of high level of what I think. I think it was very cut and dry, and I think it was very direct. If you listen to some of his speech, he said that, he believes that policy has not been restricted, or I should say, as restricted enough for long enough, right? To use sort of a paraphrase there. He said policy has not been restrictive enough for long enough, and I think I would kind of agree with that. One of the things we've talked about and explored on the channel here is, reviewing the past decade of monetary policy, particularly after the 2008 financial crisis, sort of set this new precedent in the United States of essentially quantitative easing to infinity, right? Artificial suppression of interest rates, the massive bond buying binge of the Federal Reserve, expanding their balance sheet, mainly made up of mortgage-backed securities and U.S. Treasuries, which also puts pressure on yields, right? Because if we understand the way the bond market works, there's an inverse correlation between bond prices and yields. So as bond prices get bid up, yields go down. So if you have an entity, in this case being the Federal Reserve, putting an automatic bid under the market, you're going to have a suppression of yields and rates. So for Fed Chair Jerome Powell to come out yesterday and say, look, policy has not been restrictive enough for long enough, I would actually tend to agree. Now, there's many market participants, economists included, that thinks that once the Fed gets to 5.5%, which we're there now, we're just going to start a rampant cutting cycle, which I don't think necessarily has to be the case. If you listened to that speech, he said specifically that the Fed's goal is to get inflation back to that 2% target, right? That is the Fed's target. So if you look at CPI for all items, we peaked right around, let me actually exit out of this here and I'll drop it in the chat. So CPI in the United States actually peaked in June of 2022. When inflation was about 9.1%. If you fast forward a year, the June 2023 CPI reading came in right at 3%. So I think we're going to have the higher for longer narrative in place until we see a CPI reading coming in at 2%. And I don't think that's going to happen unless we have some significant declines in shelter costs. So I know a lot of us are visual learners. I know I am. I think it's a lot easier for me to interpret data visually. So look for my comment in the chat, or if you type !CPI in the chat, I'm going to, right? This is something we talk about on the live streams. So that's exactly how. All right, let's exit the Hudson Yards vicinity. I think we're going to have some minor internet issues tonight. The weather is supposed to be crazy tomorrow. It's supposed to be 105 degrees. So the power grid in New York is going to be pretty strained. So maybe that has something to do with the horrible internet, but I see Alex is here. What's up? Sunshine after rain, Hawaii. NAV 047. Thank you for joining us. Latha, Ryan Beck. Good to see everybody. Brick Stonewall, D is here. Dutchman, Time Traveler. Addison says a humid 85 degrees is worse than a non-humid 105 degrees. Yeah, I think you're right. But here's the crazy thing. It's actually been more humid in New York, in the city. It's very, very humid. Yeah, tomorrow, I'm not looking forward to, but I will say this. I would much rather have, and this is going to sound crazy to a lot of people, I would much rather have 105 degree weather than 30 degree weather, 20 degree weather, temperatures in the negatives. So I'm not going to complain. I think it's just best we prepare. Hold on, I got to adjust my bag here. Give me 2 seconds. Okay, sorry about that. I think we are good. All right, cool. D is here. What's up? Joseph Hardaway. I see Dan, DA. Welcome, welcome. Bighorn MT says, good evening, Tom and everybody. It's good to see you all. Lena Sandoval, DC 322 says the Fed put in another 25 basis point rate hike. You're right, they did. And I think that's going to be the bulk of the conversation tonight. So I guess first and foremost, I'd like to know your thoughts on it. More specifically, I think you guys sort of know what I think. Maybe playing a bit of the contrarian narrative here. One of the things I truly think, and I truly believe, is that the Federal Reserve is probably going to keep rates stable right at this 5.25%, 5.5% range. Very possible all the way into Q2 of 2024. I mean, that's very, very possible. One of the mistakes, and again, this is just my opinion. Opinions mean nothing. We're just sort of having conversation here. This is an amazing view of the Empire State Building. Gorgeous view. I think what a lot of people try to do at these Fed meetings is sort of play mental gymnastics with what they think Fed Chair Jerome Powell is trying to signal to the market. And I think his track record has actually been very direct, in my view, right? I mean, maybe some of you disagree, but ever since the hiking cycle in March, last March, if you will, I think the direction in terms of the verbiage that has been relayed to the market, I think has been very direct. Higher for longer. We're going to be data dependent. And if you listen to the speech that he gave yesterday, he said specifically our goal is to get inflation back down to that 2% target. So if inflation, the CPI doesn't go down to that 2% target, well, it doesn't look like we're going to get rate cuts. However, there's still many analysts. I was reading through some reports and even some economists appeared on CNBC, and they think that the next move for the Federal Reserve is going to be to cut. I really don't understand how you would interpret that. Now, maybe they're sort of forecasting some type of black swan event, if you will, to make about a forced rate cut, but I'm not really seeing it, right? I'm not really seeing it. I don't know. Any thoughts there? Jafet Perez says no recession. Definitely doesn't seem like it. Ryan Beck says yes, his message has stayed consistent for the last 3 or 4 FOMCs. That's what I'm saying. And I don't think it's, I believe a lot of people don't want to take that narrative and admit that, because it's very common just to, talk bad about the Federal Reserve, right? I do as well. But I think it's been very consistent. They've been very direct. Man, this is an awesome view of the Empire. Hey, Roz999 says hello from Buffalo. Walking and listening. Good to see everybody from Buffalo. Wendy England says inflation in Canada is down to 2.8% now. I think it'll probably follow in the United States here. Hey, Riley, thank you so much for supporting our stream. Dan Zhang says, hey, Tom, I feel you're going to need a cold beer after the stream. It's just so hot today. Dude, it's going to be 105 degrees tomorrow in Manhattan. I would argue in specific spots of the city, it may even feel hotter just because you have so much asphalt all around. But yeah, man, definitely got to stay hydrated for sure. Addison says, do you have an opinion on Mbappe turning down the $776 million a year contract from the Saudis? I don't really have an opinion on it. I think it's an interesting conversation to have as it relates to, after a certain amount of net worth, if you will, I don't think lifestyle changes that much. Now, I guess I wouldn't know because I don't have $700 million, but maybe some of you watching the stream has $700 million. I mean, if you think about it, like, okay, here's how I would think about it, right? Let's say if you're liquid. Let's say if you're liquid 50 million. If you do nothing, like nothing, if you just do nothing, you don't speculate, and you just park your money in, a few stable investments, right? Maybe you own an index fund, maybe you own some US treasuries, which are now, talking about interest rates tonight, a 1-year US treasury is almost yielding 5.5%. So just do the math. If you go to Google and type in compound interest calculator, what's $50 million compounded out annually at 5% over 20 years? It's an absolutely ungodly, ridiculous amount of money. So just on your interest alone, if you could just sit back on your 50 million and make 5%, I mean, it's almost impossible to spend that money. I mean, unless there's something really wrong. I mean, unless you're, you know, like doing absolutely crazy stuff. So I think at a certain point, like Messi is already extremely wealthy beyond his wildest dreams. Mbappe is already extremely wealthy beyond his wildest dreams. So I think after a certain point, if you're worth 200, 300 million, another 700 million, it doesn't really move the needle in terms of lifestyle. At least in my view. I don't know. I'm not speaking from experience. I wish I were speaking from experience. But I don't know. What are your thoughts there? I think after a certain point, putting myself in their shoes, it would be my decision making would be all about convenience for me, what's most convenient for me and my family. And I think that's why Messi turned down $1 billion, because he's already rich. He's going to make maybe even more with his Apple TV deal over the long period of time, because I think he gets a cut of all the licensing of Apple TV. So at that point, it's just a lifestyle choice. I don't know, thoughts? Wendy Inglis is the ultra-rich blow through money like you would not believe. Maybe. Yeah, Road Dog. True. Hey, Michelle Henry's here. What's up? Brick Stonewall says when people get their electric bill, that will send some into a personal economic recession. Maybe. Alfonso says GDP numbers look strong. Very unlikely the Fed would cut rates anytime soon. I'm with you. There's no reason to, right? Think about it. If the market is performing, right, if you talk about the equity market is almost totally recovered. Even if we get a normal correction, right, that's fine. Rates are 5.5%, and unemployment is near historical lows. So what is the incentive there to cut? There is no incentive. If anything, it's stupid to do a rate cut, right? You know, we're finally getting back to a place in the United States where savers are actually being rewarded again, right? If you have a high yield savings account, if you purchase a US Treasury, you could actually, you know, build some credible wealth, you know, compounding out your money at 5%. It's not bad. I actually think this is pretty positive for the United States, to be honest. Hey, Sally is here. What's up? Always a pleasure. We're standing directly outside of Madison Square Garden. This is 8th Avenue and West 31st Street. I see Jay says, good evening, Tom. I hope you're doing well. Thank you so much. Justin S. says, sadly, our economy seems to be built on spenders and not savers. That is true. I think that's actually a really good point, Justin. One of the potential reasons why a lot of portfolio managers were caught off guard in this recent rally is I think they severely underestimated the power of the American consumer. And going back to sort of what Fed Chair Jerome Powell says, one of the things he said specifically is wage inflation has been very, very strong in the United States, which means companies are paying workers more, people are making more money. And again, always to refer back to that Harvard Business School study, the vast majority of people suffer from lifestyle inflation. So if you make $100,000 a year, or if you've made $100,000 a year in 2022, and your boss gave you a raise, right, or you left to another company and you're making, let's say, $150,000 a year, almost everybody who is in this hypothetical situation would spend right up to that threshold of 150. So more money circulating in the economy, people are employed, right? Thank God. That's what we want. And people are making more. When people make more, they spend more. This is Billy Joel. Every time we walk down 31st Street, I always like to check it out. He says Madison Square Garden is the center of the universe as far as I'm concerned, and I would agree. Big Billy Joel fan, if you guys haven't noticed. I think he's a New York icon. Long Islander. I think he resides on the North Shore of Long Island. I don't know, what, I forget. It may have been one of you guys who sent me, I think it was a Real Deal article or maybe a Wall Street Journal article. He may actually be selling his house on the North Shore of Long Island. Is that true? I think it actually may have been Hawaii who sent me that. Anyway, hey, Tom AK is here. What's up, Tom? Nicole Smith, what's up? Always a pleasure to see you. Latha says Powell is full of it on the wage inflation, because if you adjusted the minimum wage alone from the 60s today, national minimum wage, I think it's more of if you look at household income. So I get the minimum wage thing, but if you look at median household income, it's gone up over the last 5 years. So where I think you probably are onto something, and I'll just quickly show the backside of Madison Square Garden. This is where all the players go in. Also a lot of the musicians, the artists who play here, this is their entrance. Where I think you're onto something, where I think you're right, is expenses have gone up for the average American, particularly in the form of debt, right? So it's not all good news, right? If you look at household consumer debt, which is the worst kind of debt, which carries the highest amount of interest, that's actually at all-time record highs as well. So if you think about individuals who are carrying balances on credit cards, I think one of you in the chat looked this up, the average rate, right? I should say APY, if you will, on a credit card is over 15%. Some people are paying 20% interest on a credit card. So if you could imagine, you know, if you're carrying a balance of $20,000, $30,000, that's substantial, right? I mean, compound interest could work for or against you. So I think in a high rate environment, it's important to look at your personal finances and freaking hammer down your high interest debt. I think that's very important. And that's why many would argue, where should we go? We'll cross here by 2 Penn. I think many would argue that these extremely low interest rates as it relates to mortgages that people have been getting over the last 5 years is sort of going to act as an anchor to prevent these individuals from selling. Because if you sold your home today, right, even if you made the capital gain, you would just have to go right back into the market, and assuming you're going to use debt to acquire your next property, the average 30-year fixed rate mortgage, according to CNBC today, is 7.25%. I think that's only going to go higher after yesterday. Yeah, Hawaii has got to pay the statement balance off monthly to avoid the interest. You're 100,000% correct. Hey, Battery Grams, what's up? It's good to see you. Hope you're doing well. I see my friend Western Mass Dave. Michelle Henry says, what is the minimum wage nowadays? I couldn't even tell you that, to be honest. I think in New York, in the 5 boroughs, it's $15 an hour. That I know. The federal minimum wage, I couldn't tell you. If I had to guess, $7.25 maybe. Am I right on that? I don't know. I'm going to be honest, I have no idea. Awesome shot of the Empire State Building here. Hey, Gary Carpenter, what's up? Let me catch up on some of these chats. Abdullah, DC322 says Billy Joel will end his MSG residency next year. I heard about that. Hopefully I'll get to see him before that happens. Hey, Zozo Bob, what's up? Says Fed minimum wage is $7.25. ETS, as Tom Lee said, mortgage rates are going to 5%. You know, I like Tom Lee. Tom Lee, if we're talking about the same Tom Lee, he is the CEO and founder of Fundstrat, which is an equity research firm based here in Manhattan. I think Tom Lee's a good guy. I don't know about that. Mortgage rates going to 5%. Maybe he's predicting a harsh cutting cycle. But what would be the incentive for the Federal Reserve to cut rates? I mean, the economy, right? And this is, people could argue, but unemployment's at an all-time record low. It is true if you look at labor force participation, the labor force participation rate is still below where we were in 2019 or pre-pandemic, right? So that's a problem. But on the flip side of that data, you could look at the percentage of prime working age adults in the United States. And we are at an all-time record high of employment in the United States amongst people that are of prime working age, right? So essentially how you could interpret that is, say, people who are able-bodied and willing to work and are of working age, pretty much everybody's working. That's sort of how you could interpret that. So I don't know. I mean, what would be the thesis, right? What would be the event, the catalyst, if you will, that would push the Fed decision to cut rates? I don't know. I'm not seeing it now. Hey, JM says, what's happening with San Francisco? With the loss of so many businesses, do you think this could happen in Manhattan, says JM? Well, I think anything could happen. However, I tend to be a little bit of a contrarian here. About 2 months ago, we were talking about the late, great Sam Zell. Unfortunately, Sam Zell passed away, I think about 2 months ago now. Time flies. But Sam Zell really made his mark in the real estate business by being a contrarian. And I think, here's TD, Teresa Diaz, California. Gorgeous shot of the Empire State Building. It's one of my favorite shots. Right from 6th Avenue, 6th and a half Ave, and West 32nd Street. Gorgeous night in New York. Gorgeous, gorgeous night. I sort of forgot what we were talking about. I got distracted by the Empire State Building. Sam Zell. So I think a lot of people right now are very overly negative on San Francisco. Now, I'm not trying to diminish any of the horrible things that are happening there. I'm not trying to minimize the homelessness crisis there. I'm not trying to minimize the fentanyl crisis and the massive uptick in crime. But usually what happens is when you have this peak panic and this peak fear, that's usually around the time where everybody bails out and has fire sales at the bottom into people that are willing to sort of take a calculated risk to buy these distressed assets, if you will. So I'm actually interested in San Francisco. I've talked about this before. I'm going there at the end of August. I'm going to make a trip with a friend of mine who we may partner on some deals there. And we're just going to talk to people, right? I think, and many of you may agree or disagree with me, but especially after 2020, it's very hard to believe the news, both on the right and the left. It's pretty much as I just totally ignore it because it's all so fake and they all have their own narratives and their own spins. I think it's more important than ever in this day and age to do your own diligence, right? So the people that are not lazy, who will actually go and talk to the community, right? Talk to these startup founders, do their due diligence, right? Meet with politicians. I think that's where a lot of the alpha is going to be generated in a lot of these markets that have been really punished, including San Francisco. So, I don't know. I've never been to San Francisco. I'm not from there, okay? I'm from the Northeast. I'm from New York. But I think there's just too much bearish sentiment now on San Francisco and everybody counting it out. And it's very reminiscent of everybody coming on this live stream during the pandemic and telling me how horrible New York is, how it's never going to come back, how it sucks. And, well, I think you could just sort of speak, I'll let it speak for itself. So I don't know. I think I'm optimistic on San Francisco. I think there's a lot of talent, even though I tend to be on the complete opposite side of the political spectrum of the state of California, San Francisco particularly. I think there's just too much education there, or educated populace. There is such a rich culture and a rich history in San Francisco that I'd find it very, very hard to believe that we just let that go by the wayside. Look, maybe I'm wrong. Maybe I'm wrong. But I'll have to do my diligence on it. So we are now in Koreatown, one of my favorite places in the entire city. This is 32nd Street and Broadway. This is one of the most fun places you can go to in the city. It is awesome. It is a Thursday night, and it feels like a Saturday night, right? Almost every single day of the week in New York, specifically Koreatown, it feels like the weekend because there's just so much fun things to do here. Mike Choi says, Tom, you are wrong. Yeah, maybe I am wrong, right? But I think the reason why I've had even a teeny bit of success in my life is because I just don't care if I'm wrong or not. I'm just worried about making the dollar amount in the bank account expand. So if I'm wrong, I'm wrong. I cut the loss and blow it out. But I try not to let biases cloud my decision making. If I go to San Francisco and I'm extremely impressed, and I've been talking to a lot of startup founders there, if I just get this really, really good vibe from the city, I'm going to raise a bunch of money and I'm going to, make some big plays there. If not, then I won't. So. Hey, Justin B says, I don't. Hold on, let me read some of these comments. Mark says, San Francisco problem happened when Silicon Valley, high income workers moved to SF, housing driving up the rents. Maybe. Now again, I'm probably one of the most ignorant as it comes to San Francisco. So I'm doing my diligence phase now. I'll be there at the end of August. I have a few meetings set up, but maybe you guys are right. Maybe it is horrible and I'll come back and I won't like it. Soho says, Tom will be impressed by the tons of crap on the sidewalk. Hey man, we'll see. Hey, Joan K says, Koreatown is nice. It is very nice. Right across the street is Grace Street, which is one of my favorite sort of bakeries, I guess you could say. It's pretty expensive, but it's really good. Tons of amazing things to do in Koreatown. You'll never get bored here. I think Grace Street is famous for their burnt cheesecake, and it's packed, right? I mean, the line speaks for itself. The line is literally out the door. Hey, Hermes Addict says, losers fail when they quit, winners fail when they succeed. Failing fast is a thing. It's okay to be wrong. I love San Francisco. Yeah, I mean, I think that's very well said. I have never heard anybody put it like that. I just think the political climate is, especially now, I think the political climate on both the right and the left is preventing people from, investing in certain places just because it's, vote one way or the other. I couldn't care less. Hey, JM, thank you so much for your very kind $10 donation. That's very kind of you. And I really appreciate you doing that. So thank you for supporting the stream. It means a lot. I'm happy you're here. You're here in the chat all the time. And thank you for adding massive value to the stream. Thank you so much. But yeah, I think that's important. And that's actually a lesson that I learned from one of my good friends who's much older and much wiser than me. I own property in South Florida, right? It tends to vote a certain way now, right? More red, more Republican. I know people personally that are like, oh, I would never go to Florida because they're all Trump supporters and it's all Republicans. Ooh, I could never do that. And vice versa. They're like, oh, how many times do we see here on the stream, trolls commenting, oh, libtards, Democrat-run city, it's an S-hole. I had to block those keywords because we'll just be inundated by those chats. I'm a conservative. I love New York City. I live here. I built a career here. So as an investor, as a capital allocator, it's important to look at opportunities for what they are, and don't let your political biases and narratives prevent you from an amazing opportunity. And that's one of the things I learned from a really good friend. So you can make money anywhere in any city. It doesn't matter how it votes, doesn't matter who's there, doesn't matter the demographics, doesn't matter anything. There's opportunity everywhere. Hey, NBA Elias, what's up? NBA Elias, what's your take on the new monetary policy precedent that has been set in the United States? We did get a 25 basis point rate hike, and we have finally reached the 5.5% Fed funds rate. Interested to hear your take on this, because many pundits are expecting rate cuts. Wow, NBA Elias says 20 new startups in San Francisco have received funding. Wow, look at that. I think there's some heat lightning around the Empire State Building. That is an awesome shot. Let's see if we can see any more strikes. If you rewind the stream maybe 10 seconds, there was a heat lightning strike around the Empire. Hey, Out and About from Toronto, Canada. What's up? Out and About's a good friend from Toronto. I'll actually be in Canada this year, which I'm super excited about. I think I told you guys my plans were foiled of traveling to Canada. Literally, right as I was about to go with some friends, we had the whole, the lockdowns. So that was a bummer, but I'm excited to be able to go again. This looks like a new and exciting place that just opened in Koreatown. Looks like a gelato place. Hermes Addict. Says Miami is the blue part of Florida, but it's all relative. Miami Beach is still largely red, with pockets of blue, just like New York City is blue, but the Upper East Side is very red. Interesting. Hermes Addict, are you still near Little Buenos Aires, right there, 72nd, sort of Collins Avenue area? Hey, Jacqueline, says Tom, my family and I recently moved out of South Florida to North Florida. The real estate market is getting hot here. So, Jacqueline, I have a quick question for you, because this is something, so I was in a meeting. I'm so glad that Jacqueline said this, because I was in a meeting the other day. I don't know if I told you guys about this, but I may be put on a project in Sarasota, Florida, which is on the West Coast. I think it's the closest big city is Tampa, Florida, right? And one of the major narratives is that South Florida specifically, in and around Miami, has been getting so crowded and so expensive that it's pushing native Floridians out, either up towards Jacksonville, Florida, or to the west, near Tampa and Sarasota. So if you want to sort of assess prices, I would actually argue that places like Miami, Fort Lauderdale, Palm Beach is probably going to see a little bit of a cooling or even price declines outright, while people move out in search of lower rents, lower cost of living, to places just south of Tampa like Sarasota, to places more specific like Jacksonville, right? So I don't know, is that sort of what you've been seeing? Maybe more supply coming onto the market in Miami as people leave in search of lower rents and lower cost of living. Hey, Nicole Smith says I was in Boca Raton, Florida, and then moved north to St. Augustine because it's getting way too crowded down south. You know, my good friend, he's actually a really good follow on Twitter, by the way. He's a great up-and-coming trader. He just moved to St. Augustine, Florida. Check him out, Ted. If you go to my Twitter handle, @WalksWallStreet, you'll see him. Really smart kid. I think he just graduated. He lives in St. Augustine. He got a really good job there. Hey, hang with Mark Mom. This is good evening, Tom and chat. Federal Reserve announced yesterday to raise interest rates 25 basis points. Inflation still alive and lingering. Any thoughts? Yeah, I mean, I think you're 100% right. Look at how cool this lobby is. Sorry, I have a very horrible attention span, especially tonight because it's so hot. But yeah, you're 100% right. So the Fed funds rate now is at 5.25% to 5.5%. Now, what I'm most interested in, and thank you for the $2 donation, Gilbert, very kind of you. Jacqueline says Boca Raton, Florida is getting too overcrowded and expensive. Boca's nice. I want to be near the action though, Miami, but anyway, hang with Mark Mom. Very, very seldom do I watch CNBC, but I do on Fed Day, right? Because they have a lot of economists from the major investment banks sort of giving their opinions, and I sort of want to hear that. And a lot of economists on the street, very notable ones, think that this is the ceiling, 5.5% is the ceiling, and that the Fed is going to start to cut before 2024. Now, I don't understand why they think that, because you know what I think it may be, and we said this at the very beginning of the stream. Sometimes economists, they don't like to keep it simple because they think there's more to it, right? They think they have to have some elaborate explanation to sound smart. Now, I'm not saying that they just try to sound smart, but like, why wouldn't you just listen to the speech that Federal Reserve Chairman Jerome Powell gave yesterday and just take him for his word? I mean, he's done everything he said he was going to do. Well, look at this, guys. Let me make note of this. This is a new development. 5th Avenue, maybe 29th. I'll check this out. But so I wrote down a couple of statements that the Fed chair said yesterday. He said policy has not been restrictive enough for long enough. He said that verbatim. Okay, that's quote number one. Quote number two, he said, we are committed to bringing inflation down to our 2% target. Our 2% target. So right now, inflation's at 3%. So again, I'll give you guys a really good resource, and it's going to start to pour rain in about a minute. It's good that we're under the scaffolding. But if you type exclamation point CPI in the chat, okay, type exclamation point CPI in the chat, it's going to give you an interactive graph or a graphic, infographic, of a 12-month rolling average of all the inflation readings. Now, in March of 2022, inflation in the United States peaked at about 9.1%. Okay, that was June 2022. Fast forward 12 months, right, through the brunt of the quantitative tightening cycle, as the Federal Reserve raised interest rates 10 times to the tune of 500 basis points, inflation came all the way down to 3%. It's still not at 2%. And if you look at the reasons why, it's because shelter costs and food are very, very sticky as it relates to inflation. Hey, ETC333, thank you so much for your very kind and generous $10 donation. I do appreciate your support. You guys don't have to give me donations, but I do appreciate it. It's very kind of you, but seriously, you don't have to. But look, I appreciate your support, and I'm glad that you guys are here, because it's always fun doing these. It's fun having a chat with all of you. So just know that I do value that and appreciate that. Whoa, look at that. All right, let me point the camera at the Empire State Building, and let's see if we can get a crazy lightning strike on the Empire here. Columbia says yes, shelter and food are still really high. Yeah, Columbia Parkway. I want you to do this. Click the link in the chat, okay, that the Nightbot drops of CPI. You can actually individually select each individual category of inflation. So new vehicles, used vehicles, food, energy, shelter costs, and it'll plot them separately. And to your point, we've only just recently peaked as it relates to shelter costs, right? And we need a specific catalyst that's going to bring housing down. Now, I don't know what that catalyst is going to be. Now, maybe it's just going to be buyer fatigue. You know, one of the most recent data points that we've actually gotten out from the National Association of Realtors is that transaction volumes are slowly grinding to a halt, because we're seeing something very interesting in the United States specifically. Now, this also has to do with interest rates, because over the last 12 years, we've been in this quantitative easing super cycle, with most recently over the last 5 years, interest rates have been so low that there's many people, some of which of you are even in the chat, that have a mortgage rate of below 4%. So I'm going to paraphrase here. Don't take this as a quote, but this is something you should Google. Google the percentage of outstanding mortgages in the United States that are sub 5%. I think it's over 87%. So think about that for a moment. Over 87% of all mortgages in the United States that are outstanding today. You know what? This is actually a shame here, because this new development's going to block the view of the Empire. That kind of sucks. Doesn't that kind of suck? I don't want to be too negative for the new development. I mean, whoever lives in that building is going to have a bang-on accurate view of the Empire. But for us pedestrians, man, that's kind of a bummer. It sort of blocks the view. Anyway, yeah, life, liberty, and guns is 2.75% here. So there's one example. Hang with Mark Moms is my mortgage rate is 2.3%. Yeah, I mean, so think about that for a moment. According to CNBC, last time I checked before I started to do the live stream tonight, the average 30-year fixed rate mortgage in America is 7.25, right? We're above a 7 handle. So that is sort of putting a cap on supply, because people are like, look, there's a lot of uncertainty. We're just emerging out of this pandemic. And my mortgage payment is very affordable for me, and it's at a fixed cost. Plus, I have a lot of equity in the property. So even if I wanted to sell, and if I, made a significant capital gain, well, guess what? There's not a lot of good inventory on the market to go out and buy. And if I wanted to buy that, too few inventory, and assuming I don't pay cash, well, guess what? My debt costs are now over 100%. That guy almost got hit by that car. That was horrible. I don't know if you guys saw that. Maybe you could do a rewind.
Look at that, all alligator.
The rickshaw guy, I think that's what they're called, rickshaws. He was in the way of the biker and tried to swerve, almost got hit. But anyway, yeah, it's kind of crazy what's going on. And I think that's one of the many reasons why one of the top performing sectors in the stock market has been home builders. So I want you guys to look up a couple of these ticker symbols as this rat is trying to cross the street. Fast guy too. Just look up the home builders. Now, this isn't a recommendation to buy. We're just trying to do some comparative correlative analysis here as we look at the Flatiron building. Take a look at Toll Brothers, ticker symbol TOL. Take a look at Taylor Morrison Home, ticker symbol THCM, I believe. Take a look at DR Horton. All of these home builder stocks, I would say the majority of them, Pulte Home, they're trading near 52-week highs and into new highs. Now, what might the market be telling us? Well, if we know that the equity market is usually forward-looking by 6 months, to me, and again, this is just how I interpret it, I could be wrong, I'm just sharing my thoughts, and I'm going to ask you guys what you think. But to me, the market is telling us that the vast majority of new supply that's going to be coming on the market in the housing market is going to be from the home builders, new inventory. Because existing inventory is just not moving. People just don't want to sell because they don't want to lose their low interest rates. Now, what are your thoughts on that? And don't be shy to disagree. That's what the stream is about. I'm not an expert. I'm just sort of, talking this out to you guys. And I'm actually more interested in what you guys have to say. Jacqueline says, Tom, D.R. Horton, Toll Brothers, Dreamfinders, and Lennar are building a lot in North Florida. Now, has anybody ever bought a brand new home? Have anybody in the chat bought new construction? Because I haven't. But what I've been hearing, and again, this is just total anecdotal data, so take this with a grain of salt. I scan a lot of the Reddit communities. So if you type in Toll Brothers, D.R. Horton, right, Taylor Morrison Home, and you just type in Reddit, there's a lot of threads of people complaining about the build quality of these homes. Specifically with a couple, but I don't think it's fair to point those out. Hey, Blues Writer, what's up? Says DC, some companies are just young, undercapitalized, or over expanded at the wrong time and need cash to service current costs and service debt. That's an awesome shot of the city with the lightning. Latha says Lennar is also not quality construction. So what makes you say that? Are you saying that from experience? Because I've read the same thing, just in transparency, Latha. I've actually read the same exact thing. There's some horror stories on Reddit. Now again, anecdotal, but from what I've heard, a lot of these new builders, allegedly, they get a little bit crafty with the warranties. Has anybody else heard that? So it's standard practice, right? And I'm not a big new construction guy. I don't know a lot about the industry. I know actually a lot of you are involved in that industry. But most of the homes come with some sort of a warranty, where if something egregious happens in the first few years of purchase, they have to fix it at no cost. But let's just say that they've been being very creative and trying not to do that. We'll just say. Hey, premium starlights as well. Homes right now, single dwellings. Homes are very similar to subletting apartments. It's in New York City when it's used as investment property to artificially raise price of rent. Interesting comment. Let me take a screenshot of that so I can review it at a later time. Maybe I read it wrong. T is here, says, hey Tom, I bought a new construction home in December of 2021. Straight trash, the craftsmanship was horrible. Whoa, really? Now, would you feel comfortable, and please don't feel like I'm pressuring you to tell us the builder, but if you could share, I think that would be some good insight for the chat, because we do have a lot of first-time home buyers or second or third-time home buyers in the chat, and it would also be good for some intel on the stock too. There's the old saying, like, they don't build it like they used to, right? I think that may be true. I'll just give you, without giving too much detail, the home that I bought in South Florida is old, guys. It was built in 1955, okay? But I almost like that. Because if it was built in 1955 and it has all of the original windows, right? So as I was walking the property, the real estate agent, who was a really nice guy, by the way, that I bought it off of, he was like, one of the downsides of this particular property is that it doesn't have the new and improved hurricane and impact windows. It has all the original windows from 1955. And I said, that's not a negative at all. That proves to me that this property has been through all of these hurricanes since the 50s, and the windows are still intact since 1955. I mean, if anything, that's a big selling point. At least that's how I interpreted it. So I still have those old original crank windows from the 50s. Hey, Brad's Brain is here. What's up, Brad? Thanks so much for joining us. Steph UH says, Tom, our first house was built in 1954 and we loved it. Yeah, I think things were just built better back then. Wake Dog says, Polte Homes felt like they had just did enough to pass inspection. Oh my God. Now, has anybody had a positive experience buying new construction? not to just dump on new construction, but Premium Starlight. Let me read your comments. As if you have spread your mortgage over 30 years and your mortgage payment is $60 towards interest and $100 towards the principal, where they make money. So that's true, and that's also not true in a sense. You really have to understand the amortization calculator, and I think a lot of first-time home buyers unfortunately don't understand this. So I think that's a good conversation to talk about real quick. So for any first-time home buyers out there, it is so important and so critical to, before you sign your mortgage documents, go through and look at your amortization calculator. So the way this works, right, assuming you get a 30-year fixed rate product, all right, let's put the adjustables to the side for a moment. In my opinion, you should never be touching an adjustable product. That's my opinion. Doesn't mean I'm right, but if you get a 30-year fixed rate mortgage, your payment is always going to stay the same. It doesn't change. It is always going to stay the same. Now, in the first few years, okay, this is so important. For the first few years that you're making your payments, the vast majority of those payments goes towards the interest. Does that make sense? So in the first couple of years, if you look at your amortization table, let's say if your payment is $2,000 a month, well, almost 90% of that $2,000 is going to service the bank's interest that it charges you, and the other 10% is going to go towards building equity in your home. So what a lot of people sometimes say and advise is that in the first couple years of home ownership, if you could start making double payments, make sure your second payment is going all towards equity. Because what that will do is it'll jump you down further on the amortization schedule. So more and more of your monthly payment is going towards building equity, and less going towards the interest. So that is a good point. That is a very good point. So if anybody has a mortgage here, which I'm sure many of us do, I have a mortgage on my property, you can go and actually, let's say, PennyMac or whatever. Maybe you're getting a service through, JP Morgan Chase. You can go into your portal and look at your schedule, and it'll list exactly how much is going to go towards principal, and it'll list exactly how much is going to go towards interest. And that's why if you make more payments, and if you could afford to do that, over time you could be saving tens of thousands of dollars because it's not going towards interest. So that's a very good point. Hey, Who Dat Dave says pay the next month principal separately. Cut mortgage in half says Who Dat Dave. Columbia Parkway says how can you make sure a second payment goes to equity and not interest? It'll say it. So yeah, I guess I could talk about this. It's not, yeah. This is Okta's offices, by the way. This is a cybersecurity company. They specialize in identity and access management cybersecurity. Ticker symbol OKTA, Okta. But you can go into your portal. You could log on and you could make sure the payment, there's a little box that you click, at least in mine, that says pay towards principal. And that'll automatically pay the principal. Now, what a lot of people sort of misunderstand about mortgages is they think if they make double payments, their monthly payment is going to go down. It's not true. Your monthly payment will always be the same. It's just more and more and more of the $2,000, right? Assuming your monthly payment is $2,000. As time goes on, more of that $2,000 will go towards principal. Everybody, this is East 20th Street and Broadway. Look at how gorgeous this property is here. Unbelievable architecture. You could really notice a lot of the architectural diversity as we head towards the village here, as we head towards 14th Street, Union Square. You have all of these beautiful original fire escapes on these buildings. Really, really nice. MB Elias says, Tom, if possible, would you pay all cash for a home or put that cash? Yeah, I mean,
I guess it just depends on the situation, right? It really, really depends on the situation. I mean, obviously there's opportunity cost. I think so long as you're comfortable with that monthly payment to say, okay, I have enough, savings if God forbid I lose my job, I could cover that. My properties, I have a tenant in it. So I think for me, the property I'm in now, I wouldn't have wanted to pay fully cash for it because it just wouldn't have been worth it because I was going to have a tenant in there anyway. But sometimes it's worth it. I just think for me, it's very dependent on the situation, I think. Hey, Life, Liberty, and Gun says we are not paying off our $175,000 mortgage at 2.75%. Now we're investing $175K at 5.25%. That is a very good move. That is a very good move. Because now, and this is why it's so important to understand the difference between assets and liabilities. Some people, right, will consider all debt liabilities. In some cases it's not, right? In Life, Liberty, and Gun's case, he's borrowing money at the bank in this environment for less than 3%. That's an asset. The bank is losing money on his deal, right? And he could go into the marketplace to Treasury Direct, the US government, that's going to give him almost 5.5% to own a US Treasury. Arguably one of the most stable, safest investments you could make. Now, obviously, there is some risk there. In theory, right, the US government could default on its debt obligations, but that's never happened ever. That's sort of why they call it the risk-free rate of return if you buy a treasury, because the probability or the likelihood that the US government doesn't pay its bills is almost zero, right? If the US were to ever default on its debt, I think just the global financial system would just crumble, because we sort of set the standard for integrity in the financial markets. And if the United States, oh, look at this place. I think this is this vegan gelato place. But if the United States crumbles in its financial integrity, what do you think the rest of the world is going to be? Not very well, let's say that. Hey, Dan Zhang says, hey Tom, get your umbrella ready. Rain just started pouring here in Queens hard. Damn, man. And you know what? I was just about to grab my umbrella before I left, and I didn't. So I'm probably going to regret that decision here in a couple minutes. We'll make sure we walk down a street with a lot of scaffolding. But yeah, a lot of interesting stuff tonight, guys. Hey, Who Dat Dave says the interest on our debt is currently around 13% of our GDP. Who Dat Dave? It's very concerning, and I think in a recent Stanley Druckenmiller interview, Stan Druckenmiller voiced that concern, right? Because the U.S., I'm sure all of you have heard that saying, you're spending like you're in Congress. I'm sure all of you have heard that. We do spend way beyond our means. Both Democrats and Republicans, by the way, okay? Both Democrats and Republicans. It's not one party to blame. I think both parties share in that financial tyranny they're unleashing on the U.S. So as rates go up, yeah, savers, right, are going to be rewarded, but also how are we going to service our debt, right, our national debt? Because as rates go up, it's going to be harder and harder and harder to service our national debt. And Dave, that's a good point. And I don't think we've talked about that in a while. Very good point. Hey, Blues Rider, thank you so much for your very kind $10 donation. It says Tom's Umbrella and Lightning Rod Fund. I appreciate that. Fingers crossed the rain is going to hold off tonight. Fingers crossed, we'll see. but I appreciate you, Blues Writer. Thanks so much. We are here at Union Square, and if you guys are enjoying the live stream so far tonight, please feel free to leave a like on the video and click the subscribe button if you're new. We usually start these live streams off at 8:30 p.m. We'd love for you guys to join us. If you click the links in the description, you can feel free to sign up for our free newsletter, the Behind the Street newsletter that it's going to be starting up soon with some interesting content. So feel free to join our Substack. You can see a little bit of the spire of the Empire State Building with the heat lightning in the back. But I want to take you guys to Washington Square Park. We haven't been there in so long. And I think there's going to be a lot of people out tonight. Let me catch up on a few more chats here. Hey, Jacqueline, says Tom, how do you have the energy to walk so late and long and then go back home on the train? Well, so I just got a place in the city near Hudson Yards. So I'm no longer doing that crazy commute out to the island. But I feel as if I need to do this every night. It's sort of become a part of my routine. And I'll give you guys a really good book recommendation. Hopefully these guys start playing music. This would be cool to see. But I'll give you a good book recommendation. And it's called Atomic Habits by James Clear. Okay, one more time, Atomic Habits by James Clear. And if you read that book and you actually implement it, it's going to change the entire trajectory of your life. It's just insanity. And it's all about how the human body adapts and reacts to habits, to building habits. Because humanity is very good at adapting to things and surviving. And the feeling that you get when you're supposed to go to the gym and you really don't want to go to the gym, you want to just sort of lay down and sit on the couch, that actually means you're a normal functioning human being. That's your fight or flight response. That's your body's way of telling you, and trying to keep you safe, right? But if you condition your body to push through for at least 33 days, your body's fight or flight response that it uses to keep you safe is going to adapt to your new habit and force you to do the things that you used to not want to do because now you're conditioned to do that. So at 8:30, like clockwork, I'll be a little bit tired at 5 o'clock in the afternoon, right? Because I start work at 8 o'clock in the morning. But right around 8 o'clock at night, my body automatically becomes energized again because we've been doing these streams so consistently, and it's just my body automatically turns on. So if I don't do this, I can't even sleep at night. It's wild. So check out the book. It's called Atomic Habits by James Clear. And if you implement those habit building techniques, you're going to be able to master really whatever you want, right? If it's you want to learn a new programming language, you want to learn a foreign language, right? If you use some of those techniques for memorization and building good habits, it's crazy. But it's tough for the first 33 days. It's almost like a living hell to force your body to do the things you don't want to do for 33 days. But once you're over that threshold, it's wild. It's like you're a new person. It's insane. Hey, Jay, what's up? Good to see you, Jay. Yeah, out and about's like it's all about routine. I agree. Hey, Line Sync, what's up? I know, don't wear out my shoes. I've probably worn out a lot of shoes. Hey, David says thanks for the book recommendation. And you could also get it, it's a very easy read. Like this, it's probably 5th grade reading level. So you can crush this thing. You could read it in a weekend. But if you're not a big reader, just get the audiobook. And you don't even have to spend money on it. You know, many public libraries, particularly the New York Public Library, will allow you to download audiobooks for free now, which is great. Guys, check this out. We are now standing on the corner of University Place and East 12th Street. This is a great taco spot here, and it has unbelievable views of the World Trade Center. Look at that, all the way in the distance, the Freedom Tower. Fantastic. Hey, Sam M, good to see you. Diane says, does it have components of healthier eating? It does. So these habit building techniques, now I don't really want to, I feels like I'm giving a big commercial for this book, but it has really helped me a lot. Now here's one of the things that I could give you, like a tip that has helped me, you know, eat healthier if you're not like a big vegetable eater. You don't want to shock your body and overwhelm your body, right? So try incorporating, you know, pour out 1 cup of broccoli, right? Like a physical 1 serving size, 1 cup of broccoli. And this is assuming you've never eaten healthy in your life before. Once a week for 2 weeks, you're gonna have 1 cup of broccoli. You could even split that up over the 7 days, but just commit to yourself for 2 weeks that once a week for those 2 weeks, you're gonna have 1 cup of broccoli. That's gonna be so easy, it's like you're not even gonna notice, right? You're gonna start to get that dopamine hit to say, whoa, I did it, this is fantastic. Then the next 2 weeks, you say, okay, I'm gonna up this to 2 cups and split it out throughout the 14 days. And then slowly over time, your body is gonna develop that craving for the healthy food. And, you know, fast forward 6 months, 7 months, even a year down the road, if you stick with it, your body is going to shift and change to essentially view junk food as like your body will start to reject it, like you won't even want it. But you know, the problem what a lot of people do is they just try to go cold turkey and just start eating so healthy, and you overwhelm yourself and then you quit. You know, one of my good buddies stopped smoking cigarettes that way, right? He used to smoke a pack of cigarettes a day, and then he started to take 1 cigarette out of the box every day. And over time, he's smoking 1 pack a week, right? And you slowly wane yourself off the cigarettes. So you don't just go cold turkey. If you're at a pack a day, you take 1 cigarette out of the pack. I don't even know how many are in a pack. Let's say that there's 12 in a pack. Just smoke 11 cigarettes a day. And do that for 2 weeks. So smoke 11 cigarettes a day for 2 weeks. And if you do that, you're gonna get a big dopamine hit. You know, you're gonna feel empowered, you're gonna feel great. And then for the next 2 weeks, just smoke 10 cigarettes a day. And do that and repeat the process until at one point, a year down the line, you're smoking 1 cigarette a day. And by that time, you're not even gonna wanna do it. Yeah, I think we're going the right way. But yeah, by that time, you're not even gonna wanna do it. All right, hold on, I'm getting all right, I gotta pull off to the side here. I gotta check this email that's coming in. I apologize for that. Whoa, crazy. So tip of the mitts is Tom, I quit smoking a year ago cold turkey after smoking a pack and a half a day for 40 years. Well, God bless you, dude. That's amazing. That's awesome. Okay, now we are getting into the NYU neighborhood. Now, in and around NYU, you'll notice much of the real estate is actually owned by the university. More quiet down here, very beautiful. This is East 8th Street. We are now on the campus of New York University, and you may notice how it's really quiet, right? That's because school's out for the summer. I think that's a song, isn't it? Isn't that like a rock song, School's Out for the Summer? But school is out for the summer. But I can guarantee you at the end of August, when the college students start to return, oh, here's the rain. See the rain? This place will be super packed. This is actually the dormitories at NYU. Josie says, Tom, does this go to Chinatown? Yeah, it'll go, if you walk far enough, you'll go all the way to Chinatown for sure. Absolutely. Yeah, this is one of the many benefits of scaffolding in the city. Provide ample protection from the rain.
Miguel!
It's actually not coming down too bad. It's like a light mist. Let's see how many blocks we could walk while staying under the scaffolding. But look, I think we've been having some good conversations. We covered the Federal Reserve, right, yesterday, increasing interest rates. I think the only thing we didn't cover yet is Meta's earnings report. Now, ticker symbol META, our good friend Mark Zuckerberg, who may or may not fight Elon Musk in the cage match, they reported a pretty good quarter, a really good quarter, might I add. Beating on both the top and the bottom line, and beating on a guidance raise, coming in about $1 billion over on revenue estimates than the street. Speaking of the street, these are the original Belgian block. TD, Teresa Diaz, I know you're watching. You'd be proud of me. Belgian block. Usually I call them cobblestones, and the chat flames me in the comment section because I always get it wrong, but I finally remembered Belgian block. And I was in Red Hook, Brooklyn the other day, and then we'll sort of quickly talk about Meta. But I was in Red Hook, Brooklyn the other day, and really farther away than you would think. There's not a lot of train lines that go to Red Hook. You gotta walk a fair distance there, but I think that's also what a lot of people are looking for. So you could take the ferry to Manhattan. It'll get you there in less than 15 minutes. But it is an awesome neighborhood with a lot of these original streets, right? Like a lot of the original Belgian block streets. Very tight-knit community, very quiet. I was very impressed with the neighborhood. And I actually got to do a tour, a walkthrough of a really exciting new development that exceeded my expectations in a big way. Now, if you want to check it out, just so you can sort of see which development I was touring, it's called the Conover, okay? And this thing is so unique. Hold on, let me cross here. I think there's somebody laying down in the middle of the road. But it's so unique, and from one of the penthouses at the Conover, you could actually see all of Lower Manhattan. You can see up a little bit to Midtown. and you're right on the water. It's super nice, and it is unlike anything I've ever toured or explored before. Now, if you want to be in the middle of the action and feel like you're living in New York City, that is not the place for you. But if you want a little bit of a reprieve, if you want to sort of purchase something like you're living in a mini oasis, but while living in the 5 boroughs of New York City, that is the place for you. Now, it's so secluded and it's so tranquil that a lot of the Brooklyn Nets players have actually been acquiring townhomes there. Now, right near the Conover, I think Kevin Durant used to own one of the gorgeous townhomes there. Really cool neighborhood. A lot of very old bars, like that you wouldn't really, I don't know, I'll have to do a walking tour of the neighborhood and post it on the YouTube channel, but it's a really, really cool neighborhood. It almost gives off that Greenpoint vibe a little bit, if anybody's familiar with Greenpoint, Brooklyn, but very, very nice. Very, very nice. Now, this, my friends, is New York University's Stern School of Business. You can see right here, Stern 2023 for the class of 2023. Now, every time we pass the Stern School of Business here at New York University, I always like to give you guys an interesting free resource that has helped me a lot by Professor Damodaran. Now, he is one of the most well-renowned and famous professors here at the Stern School of Business. He makes regular appearances on CNBC, and he's been nicknamed the Dean of Valuation. So there's 2 specific courses that are very sought after from MBA students here at NYU. One of them is called Securities Analysis, and the other one is called Corporate Finance. These are 2 of the most sought after courses that always fill up at the Stern School of Business, but you could actually take those courses for free online. If you go to Professor Damodaran's YouTube channel, he is so kind and so generous with his time that he actually records his lectures and uploads them to YouTube for free. So an amazing resource if you're interested in finance, particularly corporate finance, as well as securities analysis. Amazing resources there. Goes a little bit in depth of financial modeling, so you learn how to build a discounted cash flow model. You'll learn about valuation. It's a really, really good course. Great professor, one of my favorite professors, and you have the opportunity to take advantage of that for free. Notice how quiet the streets got down here. Davidian, it is. It is Atswat Damodaran. You're correct. Bill says, what is the professor's name again? It is Atswat Damodaran. If you just Google it, he's going to come up. He's one of the most famous finance professors in the U.S. This coffee shop is pretty good too. It's called Think Coffee. One of the things I noticed in New York is that after the pandemic, things have been closing a lot earlier. Remember, this place used to be open till like 11 o'clock at night, especially on school nights. I used to be in here till 11 o'clock. But unfortunately, I think it closes at 7 now. Hopefully they'll start to roll that back as a lot of people come back to the city. But anybody else notice that? After the pandemic, it seems like the majority of businesses close very, very early now. I think for like these boutique kind of coffee shops, The latest one that I've ever seen open, at least now, is roughly 8 o'clock at night. Hey, the Cell Tech, good to see you. Wow, This is where I live. Places are closing early due to crime. That's unfortunate. Hey, NBA Elias. This is if the index would have risen for 14 straight days on Thursday, it would have matched the longest streak ever going back to June of 1897. Whoa, I didn't know that. Yeah, we had a pretty forceful selling day today. Now this is Broadway and Great Jones. This will take us all the way down to Soho. Time Traveler says yes, everything in Connecticut has been closing early as well. 76 has just poured rain here in the Bronx. Wayne McKay says, I believe many stores did not resume pre-pandemic hours because of increased costs. Yeah, it's kind of sad to think about. I think that also ties into the wage inflation, right? If you're going to staff your employees later, you got to make sure it's worth your while. It's kind of a nice break walking through Soho, though. You don't hear car horns honking every 15 minutes. It's just kind of nice. Nash says, do I think UFOs are real? I don't know. I watched the hearings that you all probably are referring to, right? Look at this place. Love the scaffolding. Yeah, I would say yeah. I think there's probably many unidentified objects. Now, does that mean they're alien-like? Maybe not. But if I had to, gun to my head, if I had to make a bet, right? I think the United States military has technology that we can't even wrap our head around. That's what I would say. I think the U.S. government and the U.S. military specifically have classified technologies that we can't even comprehend, that we can't even conceive or wrap our heads around. I think that is believable, and I think that's real, which would make sense, and maybe that explains some of the, unidentified object stuff. But again, I don't know. I'm not an expert in any of this. I don't know, what do you guys think? The second question was, will it affect the stock market? No, I don't think so. Unless there's like a big nuclear war. Then it's all over. Then who cares about the stock market? We'll all be dead. Guys, look at this. Look at these three. Now this is a really cool design here. I actually like this whole strip of buildings here. Look at that. All of the original facades I love. However, this one looks like a new development, but I think they did good preserving a little bit of the integrity of the block. Now, it's modern enough where it sticks out, but it's not too modern where it looks out of place. Would you agree with that? It looks just modern enough where it has like a cool vibe to it, but not so modern that it doesn't really fit with the neighborhood, I would say.
Let's go.
Hey. Nice Tesla. LW Hunters has agreed. Riley says they did a really nice job. Now, unfortunately, ooh, these actually looks like full floor apartments. Look at that. You can see the kitchen. These look like they're going to be pretty nice lofts. These are probably going to go for a lot of money. Now, you would think, right? You would think the most expensive zip code in New York would be on Billionaires Row, 57th Street. It's actually not the case. The most expensive neighborhood, if you will, is actually Tribeca, extending over into Soho, a little bit into Chinatown, Little Italy. It's become a very, very fashionable neighborhood, Tribeca. Now, if you're doing a comparative analysis in terms of price per square foot, Tribeca is trading now at a premium relative to other neighborhoods, right? So if you were going to do a comparative analysis of Tribeca, right, in terms of price per square foot to Sutton Place, for example, which is on the Upper East Side of Manhattan, which is really, really nice. It has a lot of older co-op buildings. You're going to see a huge difference in how these things trade. Now, you could be a little bit of a contrarian to say, look, does Tribeca really deserve the premium to command, you know, $2,400 per square foot? Now, maybe, and maybe that'll have some staying power, but maybe as an investor, if you look at some of these older buildings, you look at some of these older co-ops, let's say in Sutton Place, that have sort of fallen out of fashion because condos have really become in fashion, because people want to have the pools, they want to be able to have pets, they want to have their dogs, they want to have, you know, the swimming pool, the roof deck. If I had a place in Tribeca right now, maybe a good trade would be to sell Tribeca up at the highs and accumulate twice the property in Sutton Place and use it as investment, part of it rentals, and then maybe you find a nice place for yourself. Because I think that could potentially be from an investor's standpoint, right? Now, if you have the money to live in Tribeca, you probably, you know, are buying it for like your dream home, which I get. But if you just so happen to own something in Tribeca and it's been in the family for a long time, and you could sell it at this premium in the market, you know, reinvest into a different neighborhood like Sutton Place, where things are trading significantly lower, maybe it'll be a good trade. I don't know. Travel size has lots of rooftop space for sure. Hey, Young SC is loving. Says, my brother, I'm thinking about buying a condo in Manhattan for a vacation spot. Is that a good idea? Well, I mean, if it's going to be for a vacation spot, I think Manhattan is an amazing place to vacation. Contrary to what you're sort of seeing in the news right now, I think there's a lot of hyperbolic narrative circulating about the crime. Now, I want to be very clear. I am not trying to negate and diminish and say that it doesn't exist, because it does. And I think that would be disingenuous of me to say, oh, it's perfect, there's no crime. It's not true. But it's also not what you're reading in the New York Post every day, that, you know, if you take the subway, you're going to get a knife in the side of the neck. That is a little bit hyperbolic and pandering in nature, in my view. I think the city's improving. I think there's a lot of amazing things to do here. I live here. And there's no shortage of things to do. So as a vacation spot, absolutely, you're gonna have a blast in New York. There's an unlimited amount of things to do in New York City for vacation. So if you get a place in Manhattan, you know, it doesn't necessarily mean that you need to stay in Manhattan for your vacation, right? I mean, you could jump on the Long Island Railroad and go out to the Hamptons. You could go out to Jones Beach, you could go out to Robert Moses State Park. I mean, there's an unlimited amount of things to do. So I wouldn't let the narrative of, especially from people that don't live here, to say that, oh my gosh, you got to get out of big cities. It's doom and gloom. It's not. Are there problems? 100%. Is it getting better, and is it getting progressively better from what I'm seeing? Yes. Two things can be true at once. So I think you would have a great time in Manhattan. I will say that with complete certainty. So I think you'd have a great time here. Now this building is so unique. This is adjacent to the Adidas store. Now, I almost forgot to shout out one of the best coffee shops in all of Manhattan. It's right here, we passed by it. It's called Gasoline Alley Coffee. This place is so awesome. I don't get to come here as much as I'd like, mainly because I'm working on 57th Street now. But this place is fantastic. So if you're coming here, if you're visiting New York, maybe you're moving to the area, this is right on Bleecker Street, right on the corner. Called Gasoline Alley Coffee. There's not a lot of seating space, but it is such a cool place. If you look it up on Google Maps, this is one of the best coffee shops in the city right here. And during the day, this is such a cool vibe, this place. The baristas are super nice. A lot of the regulars, a lot of the locals are awesome. You can see a lot of the benches that they stack up inside the coffee shop. During the day, they're all out here. People are, conversating. It's just a really cool place and great coffee. So that is one of my recommendations. So please check it out. Premium Starlight says, Tom, how do you feel about coastal apartments, condos, and houses that have been built where insurance companies don't want to insure them due to flooding risk? Yeah, I mean, we talked about this a lot yesterday. We covered that. But I think it's appropriate maybe to cover it again and just briefly touch on it. I think it's a huge problem. Now, unfortunately, this is what I'll say, and I want to know if you guys agree, disagree, or whatnot. Generally speaking, where people want to live, it's going to be very expensive and it's going to be prone to natural disasters. Is that not a fair statement to say, or is that an unfair statement to say? I'll give you a few examples. Now, many people wouldn't think a city like New York has risk to flooding. But in many of the outer boroughs, like Queens specifically, going out further to, South Shore, Long Island, like Nassau County, even parts of Brooklyn flood really, really bad. If you go out all the way to the West Coast, right, California, they're suffering from a lot of wildfires that have forced insurance companies, specifically Allstate just announced that they're not writing any more new homeowners policies in the state of California. Now, they'll still service existing homeowners insurance policies. They're just not going to write any more new ones. But if you think about the commonalities with all of these places, people want to live in New York because it's fun. It's an amazing city. There's a huge educated populace and there's unlimited opportunity there. People want to live in parts of California that are unfortunately prone to wildfires because it's beautiful, it's gorgeous, it's sunny 24/7, 365. It's arguably one of the best climates to live in ever. So those are going to be problems there. People want to live in South Florida, particularly Miami, because it's paradise. It's like you're living on a tropical island. What is this? This is the biggest pile of trash. Okay, now that's one of the negatives about New York. I'll show you the good, bad, and the ugly, and the good, and the great. That is one of the negatives. I think that is unacceptable. Oh my God, looks like somebody tore up the garbage and threw it all over the place. But yeah, I mean, to answer your question, it's a huge problem, right? This is just something we're going to have to deal with, and I think it's going to really impact places where people want to live. People want to live in Miami. People want to live in New York City. People want to live in California, in places where there's unfortunately wildfires, And it's not exclusive to the United States, by the way. This is happening all over the world. Just look what's been going on in Canada over the last summer, right? New York City has been inundated by Canadian wildfire smoke. I know, jeez. This is a cool outdoor dining setup here. This is Prince Street and Mulberry. This is where the famous Prince Street Pizza is if we make a left. Now right down here is Prince Street Pizza, very good place. They're mostly known for their spicy pepperoni slice. But if we keep walking down Mulberry, this will bring us directly into Little Italy, which is also a great place. I can't wait for the San Gennaro's feast this year. It's probably going to be twice as expensive as last year, but I think it's still worth it. Hey, Evan Weeks is sad too. I'd love to have a place in Napa. Beautiful. Yeah, it's, unfortunately, these are just things that we need to deal with. And over the course of the last few years, I've sort of come to terms with the fact that you're going to need to deal with adversities in everything. And, you can't really worry about what you can't control. Now, you could risk mitigate as much as possible. That's why, the place I bought in Miami-Dade County, you just try not to buy in a flood zone. So you can risk mitigate as much as possible. There's only so much you could do. I can't, hide under my covers every night and just pray that there's not going to be a hurricane, because there's going to be a hurricane, and the house is probably going to get damaged, right, over time. It's just something you have to deal with. You have to accept that. It's something I went through with Hurricane Sandy, right? Long Beach was totally decimated. Parts of Massapequa, particularly the Massapequa shores, it was literally like a war zone there. I mean, I'm not sure if we have any Long Islanders in the chat, but I remember, visiting my uncle who lived in Oceanside at the time, and the water came all the way up to his, he lived in a split level home, came all the way up to the second level. So look, things happen, natural disasters happen, but you can only do so much. Now that's okay, I got to tell you about a little bit of a red flag. That's a lot of out-of-towners that are moving to New York City, and they have really high-paying jobs and they want to live in the suburbs. You got to be very careful if you're looking for homes on South Shore, Long Island, because a lot of out-of-towners that are not familiar with Long Island, they look at a price of a property that's trading at like a 20% discount to the rest of the neighborhood. And they're like, whoa, this looks like such a great deal. It's this awesome house in Oceanside. It's all brand new. It's all renovated. It's right on the canal. And it's 20% less than the majority of the homes in the neighborhood. Well, it's 20% less for a reason, okay? It's 20% less for a reason. This place is so cool. Look at how packed it is. The Spring Lounge. Now, many of those homes in South Shore, Long Island, Island Park, Oceanside, Long Beach, you're going to have to lift and elevate the house. And that could cost you, $100,000 or $200,000, okay? $250,000 to lift the house. FEMA sets specific regulations. The local municipality, Nassau County, sets specific regulations that if your house isn't lifted, you have to literally lift the house and put it up on stilts. That's why if you've been to Long Beach recently, if you've been to Island Park, Oceanside, sort of those neighborhoods, even the Massapequa shores, you'll notice the houses, a lot of the newer houses, they look kind of awkward in a way. And that's because they're literally elevated on stilts. So the whole ground floor will be this massive garage, and then you'll have this huge long stairway that actually leads up to the living space. And they have to be built that way due to the ramifications of Hurricane Sandy. Came through and decimated literally everything. So you got to be careful for that. So for our out-of-towners that sort of see those deals, quote-unquote deals, make sure you get a realtor or somebody, you know, that's from Long Island, that knows the market and that knows those specific flood zones. Now this is that good Egyptian place. It's closed now. It's called Zuba. This is a really good place down there. Yeah, Evan Weeks says same with condos in the Keys. Doesn't seem to stop people from buying ranch-style houses. That's true. I mean, you know, I think to your point, Evan, the people who are buying those $2 million places in, you know, the Keys that are very susceptible to flooding, you know, even in Fort Myers, right? Think about what happened to Fort Myers, unfortunately, last year. I think they sort of have the money to do it, if you sort of know what I mean, right? Older individuals, maybe they're like 70 years old, and they're like, look, if this place gets, you know, wiped away within the next 30 years, it's probability I'm not even going to be here to see it, right? So you might as well, you know, live it up and have a good time and live in paradise in your 70s and 80s. I don't know, maybe that's just a speculation, but at this age, at 28, I would never buy a house like that. I think the risk is just too big. You know, even in Surfside, I was looking at property in Surfside, which is unfortunately where that big condominium collapsed, which is just so horrible. Oh no, we're gonna have these people come over. Which is really horrible, but I would never buy there because it would just flood and the building would collapse, which is horrible. We'll go down here and then just go around the block. But it's a good point. It's a good point, though. Look how beautiful the fire escapes are here. Hey, Jim Lester says, Tom, I work at a home improvement store and I hear so many things about new construction and remodels. Jim, if you just joined us, we just had a conversation probably about 30 minutes ago about a lot of the new home builders, right? So a lot of the new supply that's coming on the market is coming from not resales, but it's coming from the home builders. Pulte, Toll Brothers, Taylor Morrison Homes. And there's been this big narrative that the build quality of these newer homes are really poor. So maybe there's some light you could shed in on that. Maybe there's some truth to that tale. I know a lot of people already shared their experience of just how poor their experience was with buying new builds. Because, you know, here's how I think about it, right? Specifically with home builders that are publicly traded, they have to answer to their shareholders. They have to answer to Wall Street. And they want to maximize every single metric, right? They want to make sure their gross margins are expanding. So, and again, this is just all alleged. I'm not trying to dump on the home builders right now. You know, maybe these are isolated incidents, but you know, if you want to maintain good gross margins, if you want to maintain good profitability, you're going to look for every single little thing you could do to reduce costs and cut costs and maybe even go the bare minimum. I don't know, but you know, then on the flip side of that, if too many customers have bad experiences, well, guess what's going to happen? Nobody's going to buy these new builds and nobody's going to buy these new homes. So maybe they're isolated. You know, the old saying is most people who leave reviews for a negative reason. If you have a good experience, very seldom will you really leave a good review. So who knows? Jim Lester says, I hear so many homeowners who show photographs of bad electrical and plumbing issues. Wow. Now, do you think, Jim, and this is really good, I'm so happy that you're actually sharing this with us. Do you think this is happening most recently due to the shortage in skilled labor? Does anybody remember the streams we were talking about as it relates to a massive shortage in skilled labor, particularly plumbers, HVAC, electricians, all that stuff? maybe that could be the reason why. Now this is Ferrara right here. This is one of the most famous bakeries or pastry places in Little Italy. It's fantastic. We're also celebrating the 50th anniversary of the Cannoli King, apparently. Yeah, Jax is Tom. My brother sells homes for Pulte. I don't even know if I'm pronouncing that right. But his bonus last year was more than his salary. That would make sense, right? It was a huge housing boom. I could imagine. But good for him. Good for him. I'm happy to hear that. I mean, you know, not to sound super negative on home builders, you know, they've actually been the sector that's been leading this market. You know, we do have an inventory problem in the United States of America, and we've been underbuilding for a while. So I think we need those companies. Hey, Two Wheel Freedom says I just do my own home repairs now. I know exactly what's going in workmanship-wise. Yeah, I mean, you're very blessed to be able to do that, right? And I think that's important, that if you're going to be a homeowner, you should at least try to educate yourself on how to do the basics, you know, like basic plumbing, basic electrical, right? So if you have those skills, those are really, really valuable, especially like HVAC mechanics. My friend has a big property management company, and he always tells me that it's so difficult to schedule any type of HVAC repairmen and women to come out and do any work because there's too few of them. There's a shortage of this skilled labor. Hey, Michael says it's my third time here. Well, thank you for joining us. Thank you for being here. We appreciate it. This is Hester Street. We've almost been streaming for 2 hours already. We'll end the stream when I'm a little bit closer to the train. I got to jump on the train anyway. It's going to be an early start for me. Hey, Daniel G's is off to bed. Had a great Friday, or have a great Friday. Thank you, Daniel, from Buenos Aires, Argentina. Appreciate you joining us. Yeah, if you guys enjoyed the stream tonight, feel free to leave a like on the video. Click the subscribe button if you're new. If you want to connect with us off the stream, feel free to follow us on X, which is now not Twitter. The platform is called X now. You can follow us at Walks Wall Street, or you can click the links in the description of this video and sign up for our free newsletter, Behind the Street, our Substack. I'm going to head off to the train here, but we will be live tomorrow at 8:30. And maybe this weekend we will be doing a walking tour of Red Hook, Brooklyn. But I think I want to do that a little bit earlier, so if we do that, it may be around 5:30, 6:30 when when it's still light out. I was about to say when the lights are on. I think you guys are really going to enjoy that neighborhood. I'm working on an interesting project there that I'd like to show you guys. So until we meet again, my friends. So Hawaii, appreciate it. Abdullah Travel Size, thank you so much. Gary Carpenter, Jeff, GGNYC, Austin City Limits, appreciate you. Ryan Beck, Premium Star Light. Hang with Mark Mom. Hey, the one and only Carol H. Good to see you, Carol. I hear rustling in the back. I think there's a rat fest going on there. But Carol, good to see you. Glad you're enjoying Miami. Hopefully I'll be back there pretty soon. Brick Stonewall, TC, thank you so much. Joe Driver, Oscar Diaz, Jay, Sunshine After Rain, Andy, appreciate you. Hope all is well in Korea. Marilyn from Murray Hill, Time Traveler by the book. Jim Lester, thank you so much for your insights into the construction business. We really appreciate that. I think that's one of the most valuable things about this stream is we have so many different people from so many different backgrounds providing us insight into the financial market. So thank you for that. There's always a bull market somewhere. You just need to know where to look. And I will see you guys back here tomorrow at 8:30. Take care.